Hey guys, Dave Keller here with Market Misbehavior. When I teach technical analysis to new analysts, to new investors, we always start with a really basic concept of trend. John Murphy in his book, Technical Analysis of the Financial Markets, we have a link below the video. He talked about one of the basic assumptions of technical analysis is that price moves in trends. And if you Google momentum factor, you will find lots of academic and industry literature that it justifies how price trends work, right? And they persist over time. And even though lots of people know about it and have invested with it, it still works. The momentum factor is alive and well and doing just fine. So how can we actually track trends? Well, there's a tool called the 50-day moving average, which is a basic part of the technical toolkit. And just by looking at where the price is relative to the moving average, looking at the slope of the moving average, some other things which we'll talk about in the video, it can be a really helpful way to differentiate what stocks are working and what are not. We're also going to talk about the Fang stocks, which a lot of people follow: Facebook, Amazon, Apple, Netflix, and Google, or Alphabet. We'll talk about how that's actually an outdated grouping. I'm actually going to suggest the Fame stocks. I'll share with you what those tickers are and how we can look at them using the 50-day moving average in today's video. So I know when I read John Murphy's book, this idea of trends made sense. And when you look at enough charts, you can tell that the trends persist, right? You can see when buyers or sellers anecdotally are in control, or whether there's more demand or supply, or how those different forces of fear and greed are combined, because you can see that prices move directionally, right? And a lot of the technical toolkit is meant to help us answer three questions. Where are the trends? How can I follow the trends? And how can I anticipate when those trends are over? And I would argue those are the three main questions you should be trying to answer as an investor. One of the ways we can do that are using moving averages. And after you look at just price itself, which we've talked about on this channel many times, we also use moving averages. And the 50-day moving average is a pretty commonly used technique to try to differentiate stocks that are working from stocks that are not. It's simply an average of the last 50 closing prices. It is a very simple measure of trend. But by looking at that change over time and by looking at where the price is relative to the 50-day moving average, a lot of times it will help keep you in trends that are working and help get you out of trends when they stop working and before it really leads to climactic loss. And I would argue that is really one of the main benefits of looking at charts, looking at technical analysis, is not to hit the next home run, although that's great. It's to prevent yourself from getting hurt from capital loss when price really starts to work against you. 50-day moving average a lot of times can be a really good way to do that. Before we get to the 50-day moving average and the famous stocks, this new group I want to propose to you, I want to remind you, if you like this sort of thinking about investor behavior, decision-making, and using charts and technical analysis, I hope you'll subscribe to my channel. It'll be so good to have you along the journey with us. Also, if you appreciate the video, give it a like. We'd very, very much appreciate it. Finally, put a comment below the video. What do you think about this group of famous stocks, and which of the four do you think is best positioned for the next 1 to 3 months, and why? Let's get to the charts. All right, so here we're actually starting with the New York Fang Plus Index. This is from the NYSE. On StockCharts, it's $NYFANG, but I've seen it on other platforms as well. And this is essentially an index tracking the Fang stocks. And it's not just those 5 names that I mentioned earlier: Facebook, Amazon, Apple, Netflix, and Google. It's other things like Twitter and others are part of this index. So it's sort of the Fang and Fang-like stocks. That's why it's called Fang Plus. If you look at the chart of the Fang Plus Index, you can see it is decidedly sideways, really, since the February market high. It made a new high in February along with the broader market, but from there, you have this pattern of lower highs and higher lows, or really stable lows, right? The Fang Plus Index, or the Fang stocks, have essentially been in a sideways trend, and this is sort of the growth trade has stalled. And while some stocks are working just fine, including some of the ones we're going to talk about in a moment, the Fang group is not doing particularly well. And here's why. If you look at the chart of Facebook, really decent chart, right? Hit resistance in August of last year, hit resistance or tested that again in November, again here in March, finally broke above it and retested that 300 level a couple times from above, and now resolving back to the upside. But you balance that with something like Apple, which is actually way lower in its range, testing its 200-day moving average, while Facebook is making new highs. Apple's pretty far below its new highs, currently trading around 125, with its all-time highs about 20 points higher, around $145 a share. So what happens right now in the Fang grouping is you have sort of the haves and the have-nots. And this happens a lot. A lot of times we have sort of that acronym approach, and you sort of group of a group of stocks together, and that's fine. Because during a particular moment, it explains the leadership, right? I remember when the payment processors started rallying, we talked about the MVP stocks, MasterCard, Visa, and PayPal, right? As sort of that group. And if you look back in history, the Nifty 50 and all these, there's sort of these great acronyms or great slangs to represent a particular moment. But what happens is pretty soon, those correlations start to dissipate, and stocks that tend to work together all of a sudden don't work at the same way, and you have to come up with a different acronym. And I think that's where we're at with the Fang stocks. When you think of it as the Fang stocks and they're working or they're not as a group, you're missing the fact that there's actually some pretty good dispersion right now with the stocks making new highs in that group and the stocks not making new highs in that group. So what I would propose is, instead of looking at the Fang stocks, we look at a group of 4 stocks, which I'll call the Fame stocks. We start with Facebook, which we talked about earlier. This is making new highs. Chart number 2 is Google, or Alphabet, but I'm going to use Alphabet to make it a better acronym because FUM doesn't really work for me. So we'll use Alphabet. You can see it also is testing or making a new all-time high, potentially a new all-time closing high here at the end of this week. The third stock will be Microsoft, which out of the sort of Fang man stocks has started to work. It's probably the one not making new highs out of the 4, but pulling back to its 50-day moving average. We'll come back to that in a moment. And the last one, which I'll introduce, is eBay, which is another mega cap stock with a nice trend. And similar to Facebook, it's sort of breaking out of an established base. So the consistent theme with all 4 of these stocks is that they are above their 50-day moving averages. If you think about the chart of Apple or Amazon, these are stocks, if you look at the 50-day moving average in blue, you can see these stocks are actually trading below their 50-day moving averages. And the problem with that is when you have a stock in a healthy trend, it remains above its 50-day moving average. Look at the chart of Amazon as an example of that. You take the March low of 2020, you go to the peak in early September, consistent uptrend, stock is outperforming. It's sort of a long and strong thumbs up. But that August peak has been the high for Amazon. From there, you broke down through the 50-day moving average, and it's never really recovered. It's tried a couple times to push back above the 50-day, and every time it's gone back below. Most recently, threatened a new all-time high there in April, and just barely might have touched it, but then came right back down, did not make a new closing high, and now is back below the 50-day moving average. So stocks that are sort of at their 50-day, below their 50-day, or unable to hold gains above there are not good trends. And you can see by the fact that the evidence is the fact that the relative strength has been so negative. So you've been underperforming by holding on and waiting for Amazon to prove itself. By sticking with stocks that are more like Facebook, stocks that are holding their 50-day moving average, trading above it with some space above it, overall is more of a healthy trend. So the fact that Facebook in March actually rotated higher and has pushed above its 50-day moving average and now is above 2 upward sloping moving averages is very positive. The fact that it's remaining above resistance from August, which has now become support, is really important. The fact that most recently we pulled back just above the 50-day moving average and actually rotated back to make new highs is why that's such a strong chart right now. The relative strength has been improving for the last couple months. So on charts like Apple and Amazon, the relative strength is going down, showing how it's underperforming its peers. Facebook, the relative strength is actually rotating higher. Let's go through the rest of these very quickly. Google has 2 listings. You can use GOOG or GOOGL, but similar price pattern in both. Google is probably the best example, or Alphabet is the best example of the resiliency of this 50-day moving average. You can see how really since the 4th quarter of last year, it's literally bounced off its 50-day moving average a number of times, didn't even make it down there in March, and now rotating back to new highs. So a price going higher, making new highs and new lows above an upward sloping 50-day moving average is a strong trend that, all else being equal, I would assume the path of least resistance is higher until we break the most recent swing low and or we break below the 50-day moving average. And that's why the 50-day can be really helpful. As long as we stay above the 50-day or the 10-week moving average, a lot of platforms think about, or a lot of processes include, and they're very, very similar. As long as we remain above the 50-day, we're in good shape. So that's chart number 2. Facebook was 1, Alphabet's number 2. Third is Microsoft, so within technology. Now, Microsoft is a really interesting one because if you look, Microsoft rallied into that September peak, just like Amazon did. From there, sort of consolidated. You have this pattern of lower highs and higher lows. Look at how it resolved higher. It actually took a little longer. The S&P itself actually made new highs in December into January. Microsoft took a little bit longer, but then look how it made new highs in January, broke above its swing high from September. Since then, has just pulled back to its 50-day moving average. It's broken below it a couple times, but has never really remained below it. It keeps going back to the upside. That's an encouraging chart pulling back, and you can see that investors are buying on the dips, which I would consider to be encouraging. Now, with this chart in particular, while Facebook and Google are making new highs, with something like Microsoft, I'd much rather see it break above 260, which would indicate buyers pushing, increasing in momentum, and buyers pushing the price to new highs. That would be certainly an all clear signal for something like Microsoft. The last one is not usually thought of as one of the Fang names, and it's eBay. It's a mega cap stock in consumer discretionary, but sort of in that same kind of e-commerce internet realm. This is one where it actually has traded around its 50-day moving average. At this point, what I like is the fact that it's back above its 50-day. It's breaking to new highs, so it hit resistance here around $64 in early February. It tested that again in early and late April and came back down. Now, finally, getting back above there and trading above it today, potentially closing above there for the first time. So I like the fact that you're seeing building momentum. I like the fact that we're rotating off of the 200-day moving average a couple times here in the last 6 months, but back above the 50-day is good. And with a chart like eBay, while it's not as bullish maybe as some of the other charts which have already rotated and confirmed new highs, what I like about the chart of eBay is it gives you a really clear line in the sand. As long as we remain above an ascending 50-day moving average, you know that the trend is all clear. If it breaks the 50-day, which it's done before, then you have to look at further risk. And what's happened with eBay is you look down to the 200-day moving average. That's sort of your ultimate line in the sand, and you want to make sure that would hold. So a lot of people use the 50-day moving average as a time to take partial profits. Maybe you would take off part of the position there and take off the rest of the position if we would break the 200-day. Maybe use it as just a basic trailing stop, and not that you would automatically buy or sell on the 50-day moving average, but it gives you a line in the sand at which point you agree to review the position and see if it still makes sense. So if you look at that basket of 4 stocks, Facebook, Alphabet, Microsoft, and eBay, you can see as a group, it's outperformed the Fang stocks pretty well because it doesn't have those names in the Fang group, things like Netflix and Amazon that have struggled and are more on the lower end of their range. I like the group of stocks here, these Fame stocks that have actually rotated to new highs. I like the fact that all 4 of them are above their 50-day moving average. That's what I would want to see. You'd want to see them continue to move on to new highs, see follow through to the upside. But the 50-day moving average on a stock that's breaking out is a really clear method to make sure that you stay in a chart that's working. As long as these stocks remain above their 50-day moving average, things are pretty good. If and when they break the 50-day, at the very least, you agree to review the position and see if it still makes sense in your portfolio. So that, folks, is the value of the 50-day moving average. And again, it's a simple technique. It is a very simple measure of price trend, but at the very least, it reminds you to stay in stocks that are working. When stocks are going higher, just looking at the 50-day moving average, as long as we hold that on any pullbacks, things aren't that bad. Things are still pretty good. And you can probably most likely still hold on to that position and not worry too much about things. If and when the 50-day starts to fail, if stocks are unable to hold their 50-day moving average on a pullback, it's not saying that the world is ending. It's not saying the stock is going to go to zero, but at the very least, it tells you may want to revisit those. And so screening for stocks in your portfolio that have broken down through their 50-day moving average is a real great way, if you have a large number of positions, to just filter down for some of the ones that may be actionable that you may want to just consider taking profits on, or limiting your downside risk, or just making a proper risk assessment. Also, I wanted to share this idea of the Fame stocks. I think grouping stocks like the Fang stocks together makes sense when it makes sense, when the trends are similar, and at times they have been. I would argue now you're getting a bit of differentiation. You're finding certain stocks that are working, like Facebook, and certain ones that are not, like Amazon. So these Fame stocks, Facebook, Alphabet, Microsoft, and eBay, I think are a better representation now of some of the leadership potentially in that growth area of the market. I hope you found this an interesting discussion about the 50-day moving average and the Fang and or Fame stocks. If you like this sort of thinking about investor behavior and decision-making using charts, I hope you'll subscribe to my channel. I'd love to have you along the ride with me. Also, if you appreciated this video, give us a like, would you? We'd really appreciate it. Finally, put a comment below the video. Tell me if you agree with this grouping of the Fame stocks. Which of the 4 do you think is most or best positioned, most well-positioned for the next 1 to 3 months, and why? From everyone here at Market Misbehavior, I'm Dave Keller. Be well, stay safe. We'll talk to you again soon.